All right, let's talk Zillow. In a housing market that, let's be honest, has been pretty tough, they just dropped some seriously impressive numbers. So today, we're going to break down their third quarter results, really getting into the CFO's perspective on how they're pulling this off.
Okay, so you've got the entire housing market kind of treading water, right? Just bouncing along the bottom. And then you have Zillow, who just came in and delivered a quarter that absolutely blew past expectations. So the big question is, how'd they do it? Let's start with that big, shiny top-line number. Zillow pulled in $676 million in revenue for Q3. And to be clear, that's not just a good number, it's way better than even they thought they were going to do.
But here's where it gets really interesting. That $676 million, it represents a 16% jump compared to this time last year. Now think about that. In a market that's basically flat, growing by 16%, that tells you Zillow is doing something very, very right.
And this isn't just about grabbing revenue for the sake of it. Now, they actually turned that growth into profit, a positive net income of $10 million. It really shows that their strategy is about smart, sustainable growth, not just, getting bigger at all costs.
So what is the secret sauce here? Well, Zillow's success really rests on two really powerful pillars. Let's kick things off with the one you probably know best, their for-sale engine. This is the core of their business, and believe me, it is firing on all cylinders.
I mean, this chart really says it all, doesn't it? Zillow's for-sale revenue is up 10%. The rest of the industry? It's chugging along at maybe 5%. That's not just a lead, that's a huge gap. It's a clear sign that Zillow is actively taking market share from everybody else.
And when you pop the hood and look at the engine itself, it's even more impressive. Yeah, their main residential business is growing at a super healthy 7%. But the real story? Look at mortgages. A 36% revenue jump powered by a 57% leap in loan volume? That's not just growth, my friends. That is an explosion.
But that for-sale engine is only half the story. Zillow has a second weapon in its arsenal, their rentals business. And this isn't some little side project. We're talking about a full-blown rocket ship that is fueling the company's growth in a huge way.
The story with rentals is all about momentum, pure momentum. They grew 36% in the second quarter, then they sped up to 41% in the third quarter, and now they're forecasting a massive jump to over 45% in Q4. This isn't just regular growth, it's getting faster and faster.
So what does all that acceleration actually mean for the company? Well, it means that rentals now make up more than a quarter of Zillow's total revenue. That's up from just about a fifth a year ago. So yeah, this is not a side business anymore. It's absolutely core to their success.
And what's driving this rental boom? It's pretty simple, actually. Supply. Zillow now has a record-breaking 69,000 multifamily properties advertising on its sites. That is a 47% jump from last year. More listings means more choices for renters, and that means more revenue for Zillow.
Okay, but look, a great growth story is only truly great if it's profitable. And this is where Zillow's strategy really starts to shine. They're not just growing, they're growing smarter. They have this really disciplined approach to spending that is paying off big time.
Here it is, the key to Zillow's profitability in one simple picture. Their revenue grew more than 3 times faster than their fixed costs. That's called operating leverage, and it's exactly what a smart, efficient business looks like. It's why their profit margins just keep getting wider.
And as if to prove just how financially healthy they are, Zillow's CFO started reporting a new metric this quarter, free cash flow. Just think of it like a health check for the business. It shows you how much actual, cold, hard cash the company is generating. It's kind of the ultimate sign of financial strength. Well, the results from that health check are in, and Zillow is in peak condition. They've generated a whopping $295 million in free cash flow in just 9 months. That's a 28% increase from last year, and it proves that Zillow isn't just a cool growth story, it's a cash-generating powerhouse.
So Zillow absolutely crushed Q3, but what about the future? Well, the CFO laid out a roadmap that's just as exciting. It shows they're not just planning to keep up the pace, they're actually planning to accelerate.
So get ready for an even bigger Q4. Zillow is forecasting another jump in revenue growth, landing somewhere between 16 and 18%. And it's all thanks to that unstoppable rentals business. And for the full year, they're on track for what I'd call a trifecta of success. Strong growth, bigger profit margins, and a healthy positive net income.
And the good news doesn't even stop there. Looking even further ahead to early 2026, Zillow expects, well, more of the same, more impressive growth, and even wider profit margins. It seems they have found a recipe for success, and they are sticking to it.
So, what's the big takeaway from all this? Zillow has pretty much cracked the code. They have figured out how to not just survive, but to thrive in a tough housing market, and it feels like they're just getting started. The real question now isn't if they can maintain this momentum, but just how high this rocket ship can actually fly.